Okay, let's unpack this. Today, we're taking a deep dive into the Spark SPK token. This is a genuinely fascinating project that's carving out a pretty unique niche in decentralized finance, or DeFi, as you know. We've pulled together quite a stack of sources for you, everything from core technical analyses and market insights to its intriguing historical connection with XRP. Our mission today is really to cut through the noise, distill the most important bits, and give you a crystal clear picture of what Spark is, how it operates, the real-world problems it's tackling, and, its evolving role in the broader digital finance landscape.
Yeah, and what's truly compelling about Spark, I think, is its ambition. It wants to be more than just another digital asset. It's really designed to address some foundational challenges within the entire financial ecosystem. So we'll explore the various facets that position it as a significant player, from its technical architecture right through to its market dynamics, helping you understand not just what it is, but maybe more importantly, why it matters.
Right. So to kick us off and really get to the bedrock of this project, what exactly is the Spark SDK token at its core?
At its essence, Spark, or SPK, is the native governance and staking token for the Spark protocol that launched in 2025. Its primary purpose is quite strategic, actually. It facilitates decentralized governance.
Meaning holders get a real say.
Exactly. They get a direct say in the protocol's future. It also provides crucial security through staking, and it's the mechanism for distributing rewards within its ecosystem.
Okay, that sounds like a foundational piece for a decentralized system. But beyond those internal functions, our sources describe it with a broader ambition. They call it an on-chain asset allocator.
Yeah.
Can you explain what that truly means? Why is that such a potentially powerful concept?
Well, what's fascinating here is that it's designed to be kind of the unseen plumbing of finance. It efficiently deploys stablecoin liquidity not just across DeFi, but also CeFi, your traditional crypto exchanges, financial institutions, and even into real-world assets, RWAs, things like tokenized real estate or commodities.
Wow, okay.
And the key insight, I think, is that instead of trying to directly compete with existing projects, Spark works sort of quietly behind the scenes, optimizing capital flows to provide stable, reliable liquidity and yield to other finance projects. It's like a smart traffic controller for capital.
A smart traffic controller for capital across DeFi, CeFi, and RWAs. That's a huge scope. It really sounds like it's aiming to solve some pretty profound inefficiencies. What are the key problems in the digital finance world that Spark is genuinely trying to fix for us?
Yeah, this raises an important question for the whole industry, really. Spark directly addresses issues like fragmented liquidity. That's where capital is just scattered inefficiently across countless blockchains and protocols, leading to waste, basically.
Right, inefficiency.
Exactly. It also tackles unstable yields, where interest rates fluctuate wildly, making it hard for investors and projects to plan ahead. And crucially, it aims to put to work these vast amounts of idle stablecoin capital that just sits unused in digital wallets doing nothing. Spark wants to make all that capital productive.
Okay, that makes sense. Now let's get into the mechanics. How does this all actually come together? How does SPK operate? And what does holding these tokens empower users to do?
Well, SPK plays a absolute crucial role in governing the Spark protocol. Holders can vote on protocol upgrades, key changes, new initiatives.
The direction of the project, essentially.
Precisely. Initially, this involves off-chain voting systems, things like Snapshot, which are pretty common, but there are clear plans to evolve towards more decentralized on-chain governance, really putting the power in the hands of the community over time.
And what about staking? We hear that term constantly in crypto, but how does it work specifically for SPK?
So users can stake their SPK tokens. By doing that, they earn what are called Spark points. These points can offer tangible benefits like maybe boosted rewards on Spark savings or priority access to new protocol features.
Okay, actual perks.
Right. And this staking mechanism also significantly enhances the security of the protocol. It gets the community involved in the validation process. And here's something important, a pretty unique feature. Users retain full voting rights over their SPK tokens, even while they're staked.
Oh, that's interesting. So you don't lose your say.
Exactly. It creates this powerful, sort of self-sustaining feedback loop where participation in governance and staking directly leads to rewards.
That is a clever way to incentivize both engagement and security. What are some of Spark's other standout features? What makes it unique in this, let's face it, crowded crypto space?
Well, beyond its core utility, I'd say its emphasis on decentralization is key, really empowering the community to steer development, not just, follow along. It also boasts remarkable interoperability. It's deployed across multiple blockchain networks, Ethereum, Arbitrum, Base, Optimism.
So it's not siloed.
Not at all. It isn't confined to a single ecosystem, which is huge. And finally, its tokenomics, the economic design, seem crafted for long-term sustainability. There's a carefully planned supply distribution stretched out over a decade, designed to prevent sudden market shocks.
Okay, our sources definitely describe Spark as having a substantial ecosystem.
Yeah.
Can we break down its main components, get a real grasp of the scale we're talking about here?
Absolutely. The Spark platform has three main components that work together to intelligently distribute capital. First, there's SparkLend. Think of this as a decentralized stablecoin lending protocol. It benefits from direct liquidity provided by Sky. You might remember them as MakerDAO, which issues the USDS stablecoin.
Right, formerly MakerDAO.
Exactly. So users can borrow USDS with remarkably clear and stable interest rates. It's non-custodial, meaning you always keep control of your assets. Lenders earn passive income, borrowers take over collateralized loans. Standard stuff, but done well. And SparkLend alone manages over $4.6 billion in assets.
$4.6 billion, that's definitely a major player in DeFi.
No question.
Wow, those figures really underscore the scale. Okay, what about Spark Savings? How does that component fit into the picture?
So Spark Savings lets users deposit stablecoins, USDS, USDC, DAI, the usual suspects, into specialized savings vaults. In return, they receive savings tokens like SUSDC or SUSDS, and these tokens gradually increase in value as interest accumulates. Often, this capital is invested in highly stable rates, like the Sky savings rate or the DAI savings rate.
So a way to earn yield reliably.
Precisely. And Spark Savings has attracted an impressive $2.42 billion in assets from over 187,000 users. What this really tells us, I think, is that Spark isn't just building isolated products, it's fostering a genuine network effect.
Where each part strengthens the others.
Exactly. It creates this sticky ecosystem where users benefit from, frankly, unparalleled capital efficiency and stability, which is pretty rare in the often chaotic DeFi space.
Okay, and finally, the Spark Liquidity Layer, the SLL. You mentioned it earlier. This sounds like the real engine room of the whole operation.
It truly is. The Spark Liquidity Layer, or SLL, is a sophisticated cross-chain capital allocator. It's the brain, in a way. It intelligently pools liquidity from multiple sources, including that massive $6.5 billion plus in stablecoins managed by the Sky protocol.
Okay.
The SLL then automatically directs and balances these funds across various established platforms. Think Aave, Maple, Athena, Curve, and even emerging tokenized real-world asset services like BlackRock's BUIDL and Centrifuge.
So connecting DeFi with TradFi elements too.
Precisely. It operates across several Layer 2 chains and Ethereum-compatible networks. It's all designed to optimize yield and minimize the risks you get from fragmented liquidity. The SLL itself, it functions as both infrastructure and a product, and currently holds over $3.5 billion in assets. What this whole suite demonstrates is Spark's unique strategic position. It's not just another platform, it's critical infrastructure. It's building that unseen plumbing to optimize capital across vastly different ecosystems, making DeFi hopefully more robust and less volatile.
That makes sense. Thinking back, many in our audience might have first heard about Spark in connection with XRP. What's the historical story there? How are the two connected?
Yeah, that also ties into the larger narrative around Spark's beginnings. Spark tokens do have historical roots with XRP. The initial issuance of Spark tokens was actually distributed to people who held XRP. It was done via an airdrop, which is a common method in crypto to distribute new tokens and bootstrap a community.
Okay, so how is that linked technically? Were they running on the same chain?
No, they're separate. The Flare network, where Spark operates, and the XRP ledger are distinct blockchains with different functionalities, but there's an interoperability bridge. For instance, there's a token called FXRP, which is minted on Flare based on XRP locked on the XRP ledger, and it can be settled back. At the time, Spark was even described by some as a utility fork of the XRP blockchain, meaning it extended XRP's utility in a way.
Interesting terminology.
Yeah. XRP holders could claim their Spark tokens during this airdrop. They had to enter a specific message key field from their XRP ledger addresses into their Flare address. There was a 6-month window from the snapshot date to do it. It was definitely a unique way to kickstart things.
Right. Okay, shifting gears to its current market dynamics. What's been happening with the SPK price recently? Our sources mentioned a comeback.
Yes, the Spark crypto price has staged quite a strong comeback. It jumped over 54% from its lowest point just this past week, and it's up a remarkable 310% from its all-time low.
Wow, significant moves. What's driving that?
Well, the surge seems primarily driven by a big increase in users staking their assets. We're now seeing nearly 4,000 stakers holding over 156.5 million tokens. That's valued at over $17.6 million. It's a pretty strong signal of confidence from the community, you could say.
And what are the broader demand indicators telling us? Things like TVL.
Right. The total value locked, or TVL, the total value deposited in the protocol, that surged to $106 million recently. Interestingly, this figure is slightly lower than its market capitalization, which is over $122 million. And we've also seen a substantial jump in 24-hour trading volume, hitting over $719 million.
Huge volume.
Yeah. Generally, an increase in staking inflows like this is seen as a very positive sign. It often suggests that investors anticipate prices will continue to rise.
But, as always with digital assets, no investment comes without, well, things to consider. What are the potential risks highlighted in our sources?
Two key risks are important to keep in mind. First, the network is continuously unlocking thousands of new tokens each day as part of its distribution schedule. This naturally leads to a higher circulating supply, and that can put downward pressure on the price if demand doesn't keep pace, just basic supply and demand.
Makes sense. Dilution potential.
Right. Second, the weighted funding rate for futures contracts remains in the red. Now, this metric tells us that investors in the futures market are, on average, anticipating lower prices in the future. So that's a bit of a bearish signal coming from that specific segment of the market.
Okay, good to balance the perspective. From a technical analysis angle, any quick insights you can share? What are the charts suggesting?
Sure. Looking at the 12-hour chart, the SPK price did find a bottom at 0.07746 this week. That was about 60% below its highest point this year. Critically, it formed what technical analysts call a bullish engulfing pattern. That's a popular reversal sign, often indicating that buyers are taking control from sellers.
A potential turning point indicator.
Potentially, yes. The token also remains above its 25-period moving average, which is another positive technical sign. The analysis from our sources suggests the coin will likely continue rising in the near term. Bulls seem to be targeting its all-time high of $0.1865. That would represent a 71% gain from its current level. Of course, technical analysis isn't foolproof. A drop back below that recent low of P07746 would invalidate this bullish view.
Understood. Okay, so for those in our audience who might be curious about getting involved, what's the straightforward path to acquiring SPK? And maybe more importantly, what essential security steps should they absolutely prioritize?
The process itself is pretty direct. You'd start by choosing a reliable cryptocurrency exchange that actually lists SPK for trading. Then you'll need to set up an account. This usually involves the necessary KYC checks, know your customer. That's the identity verification process, submitting ID and such.
Standard procedure for regulated exchanges.
Exactly. It's crucial for your security and for regulatory compliance. Once the account's set up, you deposit funds typically via bank transfers or maybe debit credit cards, and then you can purchase SPK on the exchange.
Okay. And on the security side, what are the absolute must-knows for listeners to protect their holdings if they do decide to acquire some SPK?
Security is paramount, always, with any digital asset. You should strongly consider storing SPK tokens in hardware wallets. These offer enhanced offline security, keeping your private keys away from online threats.
Cold storage, essentially.
Right. Be incredibly vigilant against scams. Phishing attacks, those fake emails or messages trying to steal your login details, and also fake social media announcements. Always, always verify information exclusively through official Spark channels. Don't trust random DMs or posts. It's also just worth noting, as an aside, that Binance, the major exchange, mentioned SPK as part of its HO dealer airdrops back in June 2025. They distributed 200 million SPK tokens, about 2% of the total supply, to eligible BNB subscribers. Just highlights ongoing interest in different distribution mechanisms happening.
Right, good context. So what does this all mean when we bring it together? We've unpacked Spark. SPK is this kind of dual-purpose token. It's both a critical component for decentralized governance and staking within its own ecosystem, and also a powerful, maybe behind-the-scenes, on-chain asset allocator for stablecoin liquidity, bridging DeFi, CeFi, and even real-world assets. Its impressive ecosystem components, SparkLend, Spark Savings, the Spark Liquidity Layer, they really demonstrate a project with significant scale and a clear ambition. And an ambition to solve some of the most pressing challenges in the digital finance world by creating more efficient, stable, and accessible capital markets.
Yeah, and if we connect this to the bigger picture, Spark's unique approach here, consolidating and deploying stablecoin liquidity while seamlessly integrating with both traditional and decentralized finance streams. That, combined with its genuine commitment to community-driven governance, it raises, I think, an important question for you, the listener, to consider. How might Spark's model influence the future evolution of financial systems? How might it bridge the gap between these fragmented digital assets and the broader global economy? And maybe more personally, what profound implications does this have for how you think about capital efficiency and access in this rapidly evolving financial landscape we're all navigating? Something to mull over.